I'm going to call the meeting to order. I have 9:41 a.m. We have Richard Schnur and myself present for trustees, as well as Jim Doberolny, April Smizer. Oh, and we just had Josh Inkle join us, Aaron and Kevin from Busey, and Ron Eldridge. So we're going to start with the investment presentation.
All right, good morning, everyone. This is Aaron here from Busey. Hopefully you can hear me okay. Was everybody able to pull up the report themselves, or would you like me to try to pull it up on the screen as well?
I have it. I guess it wouldn't hurt to have it on the screen.
Okay, let me see if I can do that. Are you guys able to see that yet?
So just had it up a second ago, Aaron.
Right, now all we're seeing is your desktop, it looks like, but it was there.
Okay.
Is Josh on now, or?
Here it is.
Yes, I'm on.
All right. Okay, I think I got it figured out. Sorry about that. I've got multiple monitors, and when I shared my screen, it jumped to another monitor. So, okay. Yeah, so if everybody can see that, we'll work our way through the report like we always do. I'll start off and just kind of give high-level overview, talk a little bit about the commentary for the third quarter, and then I'll hand it over to Kevin to run through the portfolio specifics. So if we jump right into it, just kind of have some notes here about the portfolio from a high level. It turned out to be a pretty good quarter despite everything going on. And we'll get into the numbers in more detail, but the portfolio got back into positive territory for the year. And so now you're looking at a gain of about 2.77 million year to date, or that was for the quarter, I'm sorry. But your ending value is about 36,871,000 as of the end of the quarter. Now I did check today. Unfortunately, given up just a little bit since the end of the quarter. It's down to about 36.5 million as of yesterday. We've had a little bit of a rough week here, so sold off just a little bit. As far as portfolio performance on a percentage basis, had a gain of about 8.1% for the quarter, which is a little ahead of the benchmark. And then year to date, portfolio has lagged just a little bit. It's up about 2.9%. Versus that blended benchmark of about 4.3. Now, as we always like to note, over the life of the account, going all the way back to 98, you're still ahead of the benchmark, returning about 7.8% versus a benchmark return of 7.3. And then we just highlight a few of the specific funds that stood out during the quarter. Fidelity Contra Fund had a great quarter, was up almost 12%, really driven by the nature of the investing style that fund has most exposure to U.S. large cap growth. And we've really seen those growth stocks just lead the way by a large margin this year. So really any fund that is invested in that space has looked pretty good this year. And in particular, the funds that are kind of in what we would call the growthiest stocks have done the best. Now, granted, the funds we're in, they tend to not be the most aggressive funds in their category. So on a relative basis, a lot of them have lagged a little bit here recently, but that's just because they're not taking as much risk, like I said, as some of these other funds that maybe have gone into some of these pricier areas of the market. But all in all, it's still a very good return, as you can see there. Year to date, up a little over 22% for that fund. In the international space, same story there. Growth stocks are leading the way. So our Euro Pacific fund is the one that invests in that area. Had a return of about 9.7%. And then we've seen emerging markets do well also. You probably remember this virus started in China. So they really dealt with it first. They got it under control, and actually they've seen their markets recover a little quicker than, say, some of the other markets. And so those emerging market funds have actually done quite well recently. And that DFA fund was up about 8.5%. And then on the fixed income side, tacked on a little more for the quarter, just a little over 1%, but a very nice return year to date, up about 5.7%. Really has to do with interest rates falling for the year. It's been a big tailwind for bond prices, and that market's performed very well. And then we do note there, since inception, that bond portfolio is actually slightly ahead of its index as well. Looking at the portfolio weightings versus the policy benchmark, pretty much right in line. We did do a little rebalancing after the last meeting. The Vanguard 500 fund, which is the equity index fund, has grown to be a little larger portion. We dialed that back a little bit after the last meeting. It's continued to perform very well. We've seen the U.S. large cap market continue to lead the way. And so it's still a little above its policy weighting, but within about 5% or so, so not too out of line. Now we'll get into the actual Black Diamond report for the account. This is our performance reporting system. It's going to start off here with a little bit of commentary and just give some market backdrop. Again, as I go through this, if you guys have questions at any time, just shout them out. Don't feel bad about interrupting me. Yeah, so as I mentioned, markets have actually been doing fairly well, all things considered. Granted, as I mentioned, we've given up a little ground here recently, but you can see there in the box, just really strong numbers across the board. In particular, I think really that NASDAQ index stands out, and that's really a technology-driven index. And like I said, that's really been the area that's led the way, and you can see up over 25% year to date. Just a fantastic number, given what the overall market's done. I think another thing that's interesting there. Oh, somebody have a question? Okay. Looking at the mid and small cap space, that's the S&P 400 and Russell 2000. Those have recovered as well, but as of the end of the quarter, they were still slightly in negative territory, still down about 8 to 9%. So those markets still have lagged a little bit for the year. Now looking forward, obviously the two big focuses for the market right now are the vaccine for COVID, and then also the election and what the reaction is going to be around that. So a couple of points around that. I think the market has recovered and produced these nice returns for the quarter because number one, I think a vaccine being developed is being priced into the market. It's probably expecting that to happen sometime by the end of this year, or maybe early next year. So I say that because if that doesn't play out, I think you'll probably see the market give up some of these gains that we've had here recently. If we see that virus delayed for whatever reason, it's probably going to put some pressure on the market. And then as it relates to the election, I think probably the market is less concerned about which party wins, but probably is more focused on a stimulus bill that may come after the election. You may recall we had the first one that was very helpful for the economy, helped consumer spending, helped the economy rebound. In fact, we had a very good GDP reading just recently of over 30%. I think a lot of that was due to that bill. But a lot of those things are expired now, and so the next stimulus bill is really needed to kind of help us get through the end of this pandemic. And unfortunately, we didn't get a deal before the election, but I think the market's pricing in of that likely happening after the election. So again, if that doesn't happen, you'll probably see the market again give up some of these gains if we don't get another stimulus bill. So that's kind of our best thoughts of kind of where we're at as we sit here today, and what we see looking forward. Now the international markets, again, they followed kind of the same trajectory as our market. Excuse me. We had the big sell-off in the first quarter, but then they've rebounded as well through the second and third quarter. But as you can see there in the box, still slightly in negative territory for the year-to-date number. And then in the fixed income market, as I noted, it was fairly quiet. Haven't seen much rate movement here recently. We've seen rates maybe tick up just very slightly, but they're really still at record low levels. And so, like I said, that has been good for bond prices because as those interest rates fall, bond prices rise. So it's produced some really nice returns year to date. The flip side of that is returns are probably going to be much lower going forward, just given how low these yields are as we sit here today. So for instance, the 10-year Treasury bond, probably somewhere around 80 to 85 basis points is what it's yielding today. So again, if you went out and bought that bond today, you're going to earn less than 1% over the next 10 years, most likely. So now granted, the portfolio rerun for you is more invested in corporate bonds, where you're going to get a higher yield than that, maybe in the 2.5% range we can maybe get right now. But again, that's still very low relative to historical standards. So maybe I'll pause there, just see if there's any questions so far on the commentary or anything I've covered. Okay. If not, then I will hand it over to Kevin. Kevin, if you want, I can just maintain control.
Yeah.
And you can kind of just tell me to click ahead if you'd like.
Yeah, that sounds good. Perfect.
Okay.
Good morning, everybody. Hope everybody's doing well. Yeah, just to continue on with what Aaron was saying, I mean, it was a strong quarter. Obviously, things have retreated a little bit here over the last 30 days or so, but just getting into the numbers a little bit more. So the last 3 months, or July 1st to September 30th, we saw a $2.7 million gain. So we ended the quarter at about 36.8 million with an 8.1% return. The interesting thing to note is that it was pretty much in line with what the MSCI All Countries Index did, which again, that's 100% global equities. So you can think about that as a 50% mix of US stocks and 50% mix of international stocks. So it's pretty much right in line with that, which is good to see. Now, year to date, obviously we had a pretty volatile year, specifically in March and April timeframe. And then actually again in September, we had a pretty volatile September as well. But even with that said, and with all of that volatility, we're still up year to date in positive territory with about $1 million of growth up until September 30th. Now, we always like to talk about the long term because obviously a lot of things can happen over the course of a quarter or even a year. So if you look at, if the last 3 years, 5 years, 10 years, and then since 1998, really strong annualized returns on over those time periods. So 9% on average over the last 3, close to 12% over the last 5, and then and same thing for last 10. And then since 98, we're still close to 8% annualized on average, which if you look at the dollar gain since then, it's about $31.5 million. So obviously we're going to have these periods of volatility. I think it feels a little bit different this year. Obviously we're not just dealing with the normal stuff like election season and things like that. We've got the pandemic, which goes without saying is stressful. But, with everything going on, the fact that the economy has recovered and then the market has recovered as well is a good sign. And then long term, we're still in positive territory. Yeah, go ahead, Aaron. You can go to the next slide. Again, like I've said before, I mean, this slide's pretty redundant, but I do like that slide at the top right, just carrying on to my points before, just about long term on a cumulative basis. We're almost at about 450% return since 1998. And again, the reason we like these charts too is it does give you that long-term perspective where, we've seen some steep drops in the past. Obviously, this shows 2000 to, basically early 2000s. you got 2008, and then most recently you can see that steep drop. But even with all of those periods of volatility, the market has been resilient. It's recovered. And we see that happening again. I mean, obviously, we're in the pandemic right now. It feels like there's no end in sight, but the economy has been resilient even through this. So hopefully, more people will get back to work here over the next several months. Hopefully, as we get a vaccine and maybe a treatment as well. And hopefully that the economy will continue to chug along there. So, but I do like this chart because it does show that long-term perspective. Looking at the portfolio, we're pretty much in line with policy weightings now. I mean, like Aaron was saying, we did that rebalance in early August, so we're pretty much in line with where we need to be. So U.S. equities about 87% when you combine all the passive and active U.S. large cap, and then in addition to the mid cap and small cap, all that lumped together is about 86.7. And then the international space, when you combine the emerging markets and developed international funds, that's about 13.3%. So we feel pretty good about that mix. And actually, over the last quarter, international has done pretty well for the most part. Specifically the emerging market fund that you own has done pretty well. I believe that one is up about 8. It was up 8.5% from July 1st to September 30th. So that fund performed well. And then, we did decide to hold on to that Vanguard International Explorer Fund. That fund was up about 9.6% the last quarter. So those actually ended up doing well because we did end up adding some to the international space. So that did benefit the portfolio overall. So just digging into the numbers a little bit more here, and Aaron touched on the fund performance, but, U.S. equity drove most of the returns. Last quarter being up 8.5%, whereas international was up 6.3%, but still good to see both of those do well because obviously US has led the way, over the last several years, but it's good to see that international did make a recovery. And even though this is not a big part of the portfolio, even international bonds, or should I say emerging market bonds, only makes up 0.5% of the account, but that had a good quarter up 2.5%. And then, just looking at the longer term numbers too, for each of the asset classes there, like I said before on the previous slide, if you look the last 3, 5, 10, and since inception numbers, the U.S. continues to drive most of the returns in your portfolio and have double-digit average annualized returns. So, Aaron, you can jump ahead to the next couple pages there. And then just lastly, because the other pages after this just show you your holdings. We always look at investment efficiency in terms of how much risk and reward, or how much risk you're taking on and the reward you're getting for the risk. So obviously things have changed a little bit with the volatility this year. Things have kind of shifted more to the right because there has been quite a bit of volatility. So whereas, I guess in normal times, what I would say is that we would be on that line or above it, which means we would be efficient from a risk return perspective. But I would say, and we've been reviewing this chart with other clients, for the most part, just with all the volatility, you've seen your portfolio shift over there to the right, which means that, volatility and risk has increased, but we haven't seen the same level of return that we have seen in recent years. So that's very common what we're seeing in other portfolios. What I will say though, is that what's good is that, if you look at the portfolio in comparison to the S&P 500, we're taking on similar risk, but we're actually getting more return. And so if we're looking at S&P as one of the benchmarks that we consider, the performance and risk return efficiency of the portfolio is actually better than the S&P 500. Any questions just on the large equity account specifically? The rest of the pages really just show your specific holdings for the most part. Okay. Sounds good. Yeah, moving on to the bond account specifically. So year to date, fixed income, I would say fixed income in general has done very well, I think, with all the volatility. Obviously U.S. markets have recovered from an equity perspective, but even in the fixed income side, we've seen some pretty strong returns. And part of that can be attributed to that volatility. I think just naturally investors, when there is volatility, they do seek the safety of bonds. And this account is specifically high quality or investment grade bonds. And the vast majority of them are in the corporate bond space. So last 3 months, the return's been about 1.1%. But for the year, we're seeing a 5.7% increase. Now, Aaron alluded to this too. The 5.7% increase is the increase in the value of bonds. But if you look at the interest rates specifically, and really the kind of the forward-looking interest rates for bonds in general, it's not looking so great, just because interest rates are expected to be low for several more years here. The Fed even said they're going to continue to keep rates where they are low for until about 2023. So I would expect, I wouldn't expect this type of appreciation in bonds, at least from a price perspective. And then I guess the forward-looking returns of bonds with interest rates being lower, that number will continue to probably come down as well. You're not seeing that yet because we did buy bonds, over the last several years that did have some pretty decent interest rates. So, but you will see that decrease over time as those bonds mature, and we're buying new bonds at lower rates over the next couple of years. So again, similar to the equity account, just on a cumulative basis, the overall appreciation in the bond portfolio has been just about 28% also, which is great. Now, you will notice we did see a decrease there of values in the March and April time period. So actually similar to the equities, definitely not as much though, because if you see how far it fell, it was about, I would say probably about a 6% decrease, where equities were down, above 20 at one point. So these bonds didn't see the same type of volatility. What is interesting though is that during the recovery, the portfolio actually did exceed, basically recovered all that value that was lost, but then exceeded it even more so on the equity side. So you can see second quarter there, we had a really nice uptick in bond values, and then third quarter not as much, but it was still in positive territory. And Aaron, you can probably go to the next slide. This one, it's just kind of redundant. So again, just going to the returns of the portfolio versus the index. We're pretty much in line with the index for the year, but we did have outperformance last quarter by about 0.5%, which was good to see. And again, a lot of that can be attributed to the overweight in the corporate space. And then longer term, again, because we really like to focus on that more than anything. I think last 3, 5, and since inception, you're looking at returns of 5%, 4%, and 3.8% on an annualized basis. So the bonds have continued to not only do their job in terms of safety, but also deliver some pretty solid returns here over the last several years. And then the risk reward efficiency chart, again, this one's going to look a little bit different than the equity space just because the level of volatility is a lot lower. But if you look at the blue box for your portfolio, we are taking on, quite a bit less risk, but we are above that efficiency line. So that means that not only are we taking on less risk, but we're getting some pretty decent returns out of that. The level of risk is higher than, if you look at that, it's almost like a pink triangle there. That's the Barclays Capital Intermediate Government Credit. So we are taking on more risks in that because, again, we are in the corporate space primarily, but we are getting rewarded for that risk. So you can see there, even though it is a little bit to the right with higher risk, we are getting a little bit more return for that. So from a risk reward efficiency standpoint, the portfolio has also done very well. And that's pretty much what we wanted to cover. All the fixed income holdings are listed here. We're continuing to, as bonds mature, we're reinvesting those as swiftly as we can. We are, the great thing about our team is they do a lot of due diligence from a fixed income perspective to find the best issues out there. And obviously we're going to be hard pressed to find yield even in the corporate space probably as time goes on. But I think our team's done a great job of doing that. Finding the best issues out there. We do have some cash that we're actually investing now, not a significant amount, but probably 50 to 60,000 But we'll continue, as these bonds mature, we'll continue to find that yield, but balance that with the equation of a strong credit rating as well. So I'll stop there. What questions does anybody have on the returns, or for Aaron or I on the markets overall? Anything?
I don't have a question, but well, maybe you call it that. My understanding is that at times we can get over the 65% equity money, and you don't have to change it every quarter, but at the end of the year, you need to do that. So have you been thinking about that?
Yeah, and I think
Ron?
Yeah, Ron, go ahead if you wanted to cover that piece.
Yeah, I'll answer that, Richard. Yeah, it's grown to about 69%, mainly because of the growth in the market values. But we do look at rebalancing those at the end of our fiscal year, which is June 30, and we were okay at June 30. But I don't know. It may all be kind of a moot point because I'm not sure exactly when the state's going to come in and take it all anyway. So,
Yeah.
But we do look at that. That was part of that rebalancing, that we did last quarter a little bit. So.
Okay, great. Yeah.
I might add, if I might, that technically you kind of look at it every quarter. I mean, if it went to 80% in a quarter, you'd certainly want to consider rebalancing at that point in time. Whether you do or not, that's something else. As regards as to whether or not and when the state of Illinois is going to come and get all our money, I'd be shocked if that happens within the next year to 18 months. They've got an interim board at this point in time, and then there's going to be a final board. I don't even know if they've had the elections yet for police and fire. If not, those are coming up soon. So until they get their boards actually situated and figure out how they're going to do all this, again, I'd be very, very surprised if they ask for the money within the next 12 to 18 months.
So,
If not,
so related to that, I sent you all a link for training from Illinois government finance officers. They're having somebody from the Fire Pension Investment Fund do a little webinar thing. So you all should have that in your email. We might be able to learn something new from that.
thanks, Elizabeth.
Okay, so I guess nobody has any further questions. I've lost track of my agenda. And hey, Jason, I noticed we have 2 people on audio that haven't been promoted. I think those might be our other 2 board members.
Those are the phone calls. You can't promote a phone call to a panelist, but you can allow them to talk. So they're still going to be listed as attendees, but they can talk whenever they would like to.
Is that Brian? Are those Brian and Mark, or do we know?
No, one of the audio is Aaron and the other audio is April.
Oh, okay. I guess I'm just confused. I see 2 in the room, but I see 2 others.
Yeah, so if you were to go to the right-hand side of your participants window, you can see all the cameras are listed as panelists, but phone calls aren't allowed to be listed as panelists, so they're still listed as attendees.
Okay, I got it. Thank you for that.
Yeah. I will note I think you do have 3 people though, so if
Right,
Yeah,
we have a quorum now with Josh, so all right. So if there's no questions, I guess we'll move on to approval of minutes from the last meeting.
You might want to make a motion first to receive and file the investment report. And again, that's a roll call vote, please.
All right, I'll make a motion to receive and file the investment report. Do we have a second?
I'll second that.
Okay, April, we need a roll call.
Roll call. So I just go through everybody.
Yeah.
Just the 3 board members, please. Mr. Ingold, Miss Hannah, and Mr. Schnur.
Okay. Josh,
Josh is a yes.
Elizabeth,
Yes.
Richard,
I take that as he's muted, so we probably need to hear the yes, you're muted.
Richard.
Yes.
Okay.
All right, so do we have a motion to approve the minutes of the last meeting?
I'll make a motion to approve the meetings from our last meeting.
Second.
Okay, we need another roll call.
Just a second, was that Richard?
Yes, that was Richard.
Okay, thank you. Okay, roll call. Josh,
Yes.
Elizabeth,
Yes.
and Richard.
Yes.
Okay, and then hey, Kevin and Aaron, you guys don't have to stick around for the whole rest of this meeting, so don't feel bad about it.
Sounds
All
good.
right.
I'm sure you
Yeah,
have other things
perfect.
to do.
Of course.
Okay,
Yeah, we'll
so-
go ahead and drop off. Goodbye,
Yeah.
everyone.
Good to see everybody. Have a
Thank
great
you.
weekend. Take care.
Take care. Stay safe.
So quarterly financial report, Ron.
Yeah, I sent that report out to everybody. And this really, I'll just highlight a couple of things. It's really nothing unusual or alarming here to report. This would be for the quarter ended September 30 and for that period of July, August, and September. In investment activity, there were no CD activity, no U.S. government activity. In corporate bonds, Busey did sell 7 bonds. They were sold and matured, and 3 were purchased for a net increase in bonds of $165,000. So they were buying a couple larger bonds. We mentioned earlier that the equity investments right now are at 69%. The return was, I calculated the return for the first 3 months was 8.1%, exactly the same as what Busey did, which is a little unusual. We're never exactly the same. The total amount of cash at our Busey accounts decreased a couple $100,000, and that's normal right now. We had not received any large property taxes at that point. We were paying our benefits. We did receive a large one. I believe it was around the 1st of October, but we're still going to need to withdraw about $800,000 in November sometime to get us through to January. There were really
I
no.
haven't looked recently, but we're still waiting on more property tax payments too, I think. So, I mean, perhaps that'll help it to work and not have to.
It's very possible, Elizabeth, you're right. It's very possible that we may not need it till like December, but I bet you that we're probably going to need it by then for sure. So there were no unusual receipts or payments during the quarter. There were some number of changes in the benefits that we paid out. Bill Marshall, he was an old-time retiree. He passed away in August. He does have a dependent spouse, so that was just transferred over. Chad Hinch retired and drew his first payment in July. David Wisher retired and also drew his first payment in July. Phil Edwards retired and drew his first payment in September. And Doyle Skinner passed away October 3rd. Wasn't in this quarter, but he had a dependent, so that got transferred over. So we did have a lot of changes in activity as far as benefits paid. Any scheduled changes in benefits for the next quarter for October, November, December, the only one is, I think it's Bill Morphy he hits age 50 and has 1 year retirement in December of 2020, this coming December. So he will get his 3% first increase. So other than that, I think that's all I had to highlight. Certainly try to answer any questions if somebody has one.
I do not have any questions. Did we just lose Josh?
Yeah, it looked like he might have had a call. He got up and started walking around, and then he dropped off.
Okay, so without Josh, we don't have a quorum, so I'm not going to make a motion to approve the financial report. We'll just, if he doesn't come back, we'll leave it till next quarter, I guess. Does that work, Toby?
Yes, it does. Elizabeth, do you have any feel for what's going on in the county treasurer's office as far as disbursements are going or not? Or not?
They're not.
Yeah.
It's a mess. I'm just hopeful after the election that we get somebody in there who's better able to deal with it.
I'm not hopeful, so we'll see.
Yeah, I mean, it can't get much worse. I mean, this is the second year that they've been very far behind, and it's frustrating, and it's, not so much for the city because it's not a huge part of our cash flow, but for the library and the pension funds, it's significant. I mean, it's most of what they have coming in. So, yeah.
Elizabeth, I have a question on that. You haven't heard anything from the county treasurer about, they held back a higher percentage of our receipts from last year's levy than they've had in the past. You haven't heard anything more about that, have you?
No, getting information from them is extremely difficult. I'll give it another try. Okay. So,
Normally, I think they hold back maybe like 1%, and in the past, they pretty much pay almost everything that's levied. But I think this year was maybe close to 5%. I can't recall, but I think that's about right.
yeah.
Excuse me. That was the treasurer?
Yes, county treasurer.
Okay, yeah.
Yeah, I'll give it another try. I feel like Marisol's probably just kind of in over her head, and it is what it is.
Well, it sure wouldn't surprise me that they had a greater number of people appeal and protest their property taxes. That would surprise me a bit.
No, it wouldn't. But,
I just got a notice of late payment on all of my income properties in Urbana, and they were all paid before the first installment was due. So,
yeah, I think basically what they're saying is just ignore it. They'll get caught up at some point. Who knows when? But okay, so we're not going to approve the report. If there aren't any other questions, do we have anybody for public input? I don't think we have anybody.
Yeah.
Okay. So the next item is approval of operating procedures for the pension fund, which we also can't approve for lack of a quorum. So we'll keep rolling along. We had something on here about Larry Bundy, date of death, and the October 2019 pension payment. I'm not remembering the details.
Yeah, that would be a question for Josh if he comes back. Remember, Larry Bundy passed away, and we never had an official date of death.
Yeah,
And
so
we did pay, we did pay him considerably a number of months that probably technically and legally maybe we shouldn't, but we really need to kind of get that death certificate and official date of death sometime,
Okay. Let's just leave it on here, and I'll try and email Josh too in case he has something. Okay, new business. First item is fiduciary liability renewal for the year beginning February 1. I do not have the proposal yet from our broker, so there's nothing to discuss. The annual funding request, Ron, we can't approve it, but.
Sure. I think I sent that out, a copy to everybody. This is strictly based from the actuary report that we received, and it is calculated the amount to be by the actuary to be funded 1,723,669. The amount calculated by the actuary based on the methods that the city has endorsed is 1,403,000. And this is 81% of the record amount. But note that that amount calculated for the city is up 11% over the amount funded by the city last year of 1,261,000. So it did go up considerably.
Right, this is the third year of the transition plan we worked out with Todd Schroeder. So,
So I think someone, if there are questions, we can talk about it. If not, so well, I guess we can't approve it without Josh.
Yeah. My concern is that it will have to be approved maybe at a special meeting or something between now and I don't know, when does the city enact their budget?
Our budget?
Or tax, not the budget, but yeah. You're coming up.
We won't actually take final action on the tax levy until December. But we're gonna, I'd have to look at my calendar. I'm on vacation. I haven't looked at it for 2 weeks, but I have a schedule lined out. I think we've got the estimated levy going to council probably like 2 weeks or so from Monday.
Yeah, all I'm saying is we do need to probably have, if Josh isn't able to return, have a special meeting just for those issues. It wouldn't take 5 minutes and get it done before the city takes their final action.
Okay. All right. I'll let him know
Great.
if he can come up with something. Okay. So the next item is the actuarial report with Ron's name on that. So
That would be this. I mean, Ron can talk about it, but to prove it, we're going to need that special meeting.
right, yes. I mean, is there really anything more? You kind of covered that in the last.
Yeah, I don't know if there's anything to talk about the actual report. I think everyone did have a copy of it, and those are the most important information is the tax levy. So.
Okay. All right. Then approval of new recording secretaries. So you all probably have noticed that we have April Smizer here, who is going to be our new recording secretary. We can't officially approve her, but welcome, April. Thank you for joining us.
Yeah, I would like to say too, thank you for joining us. And I would like to send a thank you to Kay Meharry for all her efforts in the past too, for however many years that's been.
And I see we have a new participant. Does he have public input, Carla? Okay. So we have meeting dates for next year. I mean, the meeting dates look fine to me, but again, we can't approve them. So we'll just push that off. So it seems like we need to come back on that special meeting, and if we can, we probably just need to catch all these items that we're not approving now that are just open and waiting for approval.
Hey, may I bring up something that's not agenda or not an item for voting or anything? And that's, I'm doing our annual report to the Department of Insurance, and one of the questions they specifically ask is about training for the trustees. Have the new ones got the 40 hours and have the remaining ones got the 16? So I think both Richard and you have got their training and have the certificates, but I don't know about Mark and Josh and Brian. And I'm not sure if we just write in there that we don't have it. I'm not sure what they're going to do.
Yeah, they're not going to like that, but okay. Well, when we do that special meeting, April, can you put that on the agenda too? What's the date? We have to click submit on that.
Well, I think it's got to be done I think it's got to be done here before the next couple of weeks, but I will reach out to all three of those people and remind them and ask them to go on that IPPFA site. I mean, it's a very easy thing to do. You know, it's online and it really doesn't take that long a time. And, you know, you take those quizzes and they tell you if you get a wrong answer, so you can go back and learn from it. And you
Yeah,
get the certificate.
I think the issue is the time period, because I think what Dobie's always advised us is it's the year runs like August to August or something.
Yeah, it has in the past, but now they've changed the requirements to 16 hours and so, but
Can we
the
go in at
report
this
is
point
for
in
the
time?
past, so
Right.
they probably, if they don't have them, they're
They
not
don't
going
have
to have them.
Right, we
My
can't just have them
understanding
go
is that-
now and report it on the FY20 report as training, because it's not.
Yeah.
I thought the law went down to 8 hours.
I think you're right, Richard. It's probably 16 for new guys.
Yes.
And then, I don't know, I'll have to look to make sure. I did want to comment about one of the items on here, the deputy chief position. I looked at a copy of that job description that's being, I don't know if it's been posted or will be posted. But I would, by basis of what I saw, whoever's hired for it will be a member of the fund and have to make contributions based on that salary. Because one of the requirements is that they report to fire scene and assume command as needed. And if there's one case out there, the Cronauer case, although it's a split decision 2-1, it's the only case in the state that basically says if part of your job description is to report for fires and show up at the scene, doesn't make a difference if you're dragging hose or if you're directing someone to drag hose, you're considered to be a firefighter for pension fund purposes.
Yeah, I don't think we ever had any question about it, that they.
Okay, well, some communities are having deputy chiefs that are, for lack of a better term, an administrative officer. They don't report to fires, but they do everything else within the department. And so they're putting those guys in IMRF or maybe have a separate issue for them. But I just wanted to let the board know that if, as and when that position is ever filled, that based on that job description, they're in.
Yeah, and it's currently posted. We're getting applications.
Great.
I've seen several already, so.
Great.
Okay, so I don't know that there's anything else we can do right now. So do we need a motion to adjourn? Or
Sure.
no?
Even if it's not good, it doesn't make any difference.
Yeah.
Yeah, I mean, like they're okay. So there's no further business. So let's call it adjourned. I will email Josh and I'll copy April so she knows what I'm telling him, and see if we can't get a special meeting like within the next, I guess, week or two at the outside, just because of needing. I think the levy request is the big thing that is a timing issue.
Elizabeth, before we adjourn, were you thinking about the meeting in January? Were you thinking about the 22nd, which is the 4th Friday, or the 29th, which is the 5th Friday?
I don't know.
29.
I didn't come up with those dates. I don't know.
No, that's,
matter.
Josh put that in the email, and all the days for next year. And it's to January, it's the 29th.
Well, let's put that on the agenda. That's going to be the special meeting. So.
Right. Yeah, we can change it before we approve this schedule if we want to talk about it. But yeah. Okay, so let's call the meeting adjourned. I'll send an email to Josh right away so we can get the ball rolling on our special meeting.